Hello and welcome to Livewire C-Suite reporting season coverage. I'm Ali Selby, and today we're very lucky to be sitting down with the CEO and founder of WiseTech Global, Richard White, for an insider's look at the company's latest result, as well as a sneak peek into what investors can expect over the coming 12 months. Thanks so much for joining us today, Richard. It's awesome to have you here again to look at the company's latest result.
It's a pleasure to be here, Ali.
What are some of the key figures that you think investors should be aware of?
So WiseTech is a true growth company, but it's also a very efficient company inside. And we, I think, outperformed the market's expectations because we've lifted our EBITDA margin to 50% exit rate at the end of 2024. I think that's the thing that's really quite impressive and has driven a lot of the upside surprise, if you would think. Also, our forward guidance was quite strong, and it included things such as another top 25, in fact a top 10 company, Nippon Express, another win. That's 2 top 25s in the last year. That's pretty powerful, plus 4 other large global forwarders. We also had very strong product releases. We've announced 3 really very strong breakthrough products. The release of our 4th generation product, CargoWise Next, a new capability called Container Transport Optimization, and another product called ComplianceWise, which is going to be released in 2 phases. The initial phase will come out at the end of this quarter, and all of those will be out by the end of this year. So that's a pretty powerful set of products. They're big, they're important, they make a difference to the industry, and the key capabilities of those products are in a white space area where there's no product in that space, and these products create major upside advantages for our customers and for the world's logistics businesses.
We'll dive a little bit deeper into those new products later. Right now I want to talk about valuation. The share price lifted 16% today. The market obviously loved the result. The company is now trading on a price to earnings ratio of around 165 times, which is obviously objectively expensive. How do you think investors should think about valuation when it comes to WiseTech?
It's the market's job to value a company. I don't value the company at all. All I'm doing, and all my team is doing, and what WiseTech is largely doing, is creating a valuable, high growth business with a fantastically powerful product. We've got a huge moat around us from that product space. We really have a substantial advantage. And I think people are actually pricing the growth that WiseTech has had very reliably for many, many years. Our CAGR has been 30 to 33% year on, year in, year out. And when you put that all together, that's the growth part of the story. But you also combine that with the fact that WiseTech is an extremely profitable business. Now, in the world of technology companies, particularly smaller technology companies, it's very surprising to see any profit from any of the technology companies. WiseTech is very unusual in that it's very high growth. It's quite substantial in that as an Australian company, it's a world leader, and it's very, very profitable and cash generative. Those things are quite unique, and really good businesses have really good multiples.
You talked about a few awesome contract wins during the year, including Nippon Express, which actually happened after the financial year, which is Japan's largest freight forwarder. Do you see that momentum continuing in terms of contract wins?
Yes, so we've got a very sophisticated way of looking at sales opportunities, and the opportunity pipeline is as strong as it's ever been, in fact stronger, and particularly strong in Asia. So we think that we have crossed a barrier where people are starting to realise we've got more than 50% of the top 25 either rolled out or rolling out on our platform. The platform is becoming more and more valuable every day, and people are starting to realise that at our level of investment, they can't build the product themselves. They can't find another product that's anything like as good. And the best thing to do is to lean in and make the change.
We've seen increased global disruption in global trade. How has that impacted WiseTech's business?
Well, it hasn't really. In fact, whilst global trade is said to have some sort of impact from these outbreaks of regional wars, the global trade is actually doing quite well. There's a lot of talk about rates being this or that, but volumes are actually doing quite well, and they're sustaining reasonable growth. We could have a bit more growth, but that growth is working quite well for us. and I think it's going to continue to be that way.
Okay, I want to talk about cost cutting. WiseTech has been running a cost efficiency program. You're hoping to cut around 50 million annually. Where have you been trimming the fat?
Well, it's 50 million this year. We targeted 40 million last year, which we made. That's the run rate at the end of FY24 was a $40 million cost saving. This year we've added another 10 to that because we think there's a little bit more to do. But when you acquire a global business, it's typical that they don't have the internal efficiencies of WiseTech. WiseTech is incredibly internally automated. Practically everything which is repetitive that can be automated has been either using machine learning or big data or some automation tool, and more recently Gen AI. We automate everything that we possibly can. And so
Can you provide an example of that?
Yeah. So for instance, all our invoicing is completely automated, it's not touched by human hands. The support systems are completely electronic. Our release cycle for software builds and for release patches, updates and deployment, all automated. Database upgrades, health checks on customer systems, and many other aspects of the day-to-day work that we would normally do that normally require people to be pressing buttons and running things and checking things is all done by compute. And that means that a lot of the labour that is in other companies is just not in WiseTech. And so those cost savings are caused by those automations.
You have 121 million in cash and 500 million in undrawn debt facilities on your balance sheet. Do you have any concrete plans for that cash over FY25?
Well, first of all, that is a war chest that we can use if we need it. And it's not burning a hole in our pocket. We're not trying to spend it suddenly. We have a very consistent M&A program that buys relatively small businesses that add value to the CargoWise platform. Typically they're tuck-ins, maybe between 10 and 100 million would be the range of those business purchases. We might do a number every year. There may be something that comes up which is a bigger deal that we look at, but I'm not that keen on big deals. I'm much more interested in small foothold acquisitions in a new country to penetrate that new country, or a tuck-in to build a significant benefit inside the core platform.
Do you see any chance of redistributing that capital to shareholders, like in buybacks or special dividends?
I don't think so, because look, the company is very cash positive and profitable, and we pay a dividend. In fact, we paid an increased dividend this year. But I think we're doing a very effective job of using the cash properly, because if you look at what the company's doing and its growth in value in the market, it seems to be working really quite well. I think we're on the right model here now.
I want to go back to something you mentioned at the beginning, which was those 3 new product releases. What impact do you think those will have on WiseTech's bottom line?
Well, we've sort of guided to that pretty effectively. It's certainly going to have a further lift in profit, and in fact, we think that the end rate at the end of FY25 will be about 53% EBITDA margin, which is a substantial increase over the 50% exit rate for FY24. But you've got to look at it a bit differently. You've got to think about these things as what happens when you run a good business, when you're cost-focused and growth-focused at the same time. There's a lot of things to do. We're busy. And the products have been under construction for some time, and they happen to all fall into a little bit over a quarter of release. But these are all very powerful growth capabilities.
Okay. You and your co-founder have been selling quite a lot of stock this year. I added it all up and you've sold nearly 305 million worth of stock alone. There's obviously a lot of reasons why people sell stock, but one reason why people buy stock. Can you take us through why you have been selling so much stock this year?
First of all, the trades have been tiny and daily. And I've been approached dozens of times by various investor groups asking if I would sell them a block. And I'm unwilling to do that because I want the market to be very calm and in an orderly fashion. And a block is very noisy, comes at a big discount, and it requires a lot of effort to do. And I think people would expect, given the size of our shareholding, which is 38 point something, 38.6 or something, approximately, that some diversification was quite reasonable. So making a small daily trade in a very orderly way and reporting it every week as we do means that people can see that liquidity is coming into the market, and this is actually attractive for new investors. They think, okay, there is a bit of liquidity around, I can take that liquidity and I can buy for it. The alternative would be to not sell the stock, and we get a lot of complaints about the inability to get stock in enough size to make a substantial holding. So it's a sort of a dual-edged sword, but I've been selling small amounts of stock, about the same percentage every day for probably the last 3 years, and only in the normal trading periods, not in the blackout periods, of course. And I think it's just a regular thing. But the interesting thing is that my total holding, Maria and my total holding today is much larger than it was at the beginning of the last trading session when I started selling shares. So it's a bit like the magic pudding in this. If you think it gets bigger even though we're taking bits of the pudding out. Small, very small, gentle things, and we're just diversifying into property and other things like that.
Right. I feel like the last trade was like $43 million, so that doesn't feel like a small trade.
It was, I think that was a week's worth of trade.
Right.
And I think it was about $7.5 million a day.
Right. Okay.
You've got to look at comparatively to, I don't know what the total value is, it's 12 or something billion. So it's relatively small on a daily basis. And it's about the same number of shares that we were selling a few years ago. But the price is just higher, so the trade is higher.
Okay, last question for today. You provided guidance that earnings will grow by 33 to 41% in FY25. How are you going to achieve that?
Well, first of all, we're a product-led company. We've got great innovation. We're building things that revolutionise the marketplace. These are breakthrough products, and that's the big piece of it. There is an amount of organic growth that's coming through just because of all the things we're doing. There's very large new customer wins, which you've heard of 2 of them. There's the new products, and then there's just we work really hard for our shareholders.
Okay, well, thank you so much for your time today, Richard. It was awesome to have you here to talk all about WiseTech's latest result.
It's an absolute pleasure, Ali.
If you enjoyed that too, don't forget to subscribe to LiveWise YouTube channel. We're adding so much great content just like this every single week.